Hey everyone, and welcome to this month's Redwood Money Client Update. I hope that you and your family had a really great month. For us, it was really fun. We got away to Carmel for Jordan's birthday at the beginning of the month. And then just last week, we were in Tahoe, so kind of exploring California, enjoying the fall weather. I hope that it's been a great month for you. And this month's client update is going to be really quick. I just wanted to cover a few topics as we head into November and December. The first one is I want to gauge your interest in potential tax coordination services. What this would be is I would connect you with a CPA firm, and I would really play the role of liaison between you and that CPA firm. So they would be filing the taxes. I would be helping make sure that documents are flowing back and forth and that all of the different tax planning moves we had, like funding tax advantaged accounts, things like your mortgage interest deduction, any improvements to your house that would qualify for a green energy credit, that all of those things get sort of taken advantage of. And it would give me greater visibility into your tax planning. I think it would be competitively priced with an existing CPA if you're paying for them, and it would be a pretty delegated model for you. If that's something that's exciting to you, please reach out to me at jeff@redwoodmoney.com. Just say, hey, I'm interested in those tax services. Can you share more? I'm interviewing a firm that can help with this, and I want to see how many clients would be interested in doing it, rather than the existing model where if you have a CPA, I'll help out, but I don't have total visibility into your tax planning when it comes to the tax filing side of things. The other few things I've got slides for, but we'll be walking through some 2023 contribution and tax limit updates. I'm going to tease a new HSA video that just came out and talk a little bit about year-end meetings. Before we get into that, if you didn't catch last month's update, just another reminder about those 5 year-end planning ideas that I had. The first one is to stay on track with your retirement savings. We're reviewing this. We've created a plan and a money tree of where your money's going to go, but you can see the different account types that you can fund here, the annual limit for 2022, and when you can fund these. For some of them, like a 401k, a 403b, you have to fund these before the end of the year through payroll. For other ones like IRAs and HSAs, you actually have all the way until tax day to finish your contributions for 2022. And I'll be sharing a little bit more about how these contribution limits have changed in a few minutes for 2023, which is exciting as we think about tax savings for next year. Next few things, we talked about I-bonds. Those interest rates are going to reset in just a few days for the next 6 months. It's probably going to come down from 9.6% to somewhere just under 7%. So that's something for us to be looking at as we look ahead to the future with inflation potentially coming down, but those still being a really compelling risk-free investment option that has a higher interest rate than typical cash yield accounts right now. Third one, I'm going to continue to encourage you to do this because this is something that we can control. Dial in the budget. We're heading into what can be some of the most expensive months of the year. It's a great time to be intentional. I want to encourage you to log into Right Capital if you haven't. Take a look at that budget tab. You've got a transactions section where you can categorize transactions and you can see at a glance how much did we spend, how much are we earning, is this fitting within our financial plan, and ultimately, are we spending in accordance with our values? If you'd like help with that, head to redwoodmoney.com/budget, and that will help us to schedule a meeting to walk through creating and refining your budget together. The fourth one, if it's open enrollment season, please connect with me so we can review your employee benefits, make sure that you are enrolled in the right health plan, and take another look at things like 401ks, ESPPs, disability insurance, all those bells and whistles that your employer may provide. Fifth and finally, continue that conversation around charitable giving. There are so many needs that I know many of my clients are in a position to meet, and that so many of you are charitably inclined. Rather than doing that gift December 28th, what if you planned ahead and you had finished the giving by Thanksgiving and you could talk about it during Thanksgiving dinner? Let's plan ahead. Let's talk about charitable giving. Think about the organizations you want to support either at year end or throughout the year and get that in action. Okay, so that's a review from last month. I'll put a link to last month's video if you'd like to go deeper on any of those subjects. But moving forward, as we look ahead to 2023, the IRS has released the annual contribution limits to many of these accounts. You don't need to look out for them because I look out for them, and I will make sure that you're contributing effectively to these different accounts. But just to show you, this is sort of one of the positives of inflation, is that the government does take it into account and make some adjustments each year based on the most recent inflation data. So with inflation trending up, you'll notice here 401ks through TSPs, all of these employer-sponsored plans, the 2023 annual limits increase your contributions by $2,000 if you're under 50 and $3,000 per year if you are over 50. So more money you can shield from taxation there. Traditional and Roth IRAs got their first boost in a few years from $6,000 to $6,500 per year. So that's a nice $500 boost for 2023. SEP IRAs got a really big boost. You can contribute up to $66,000 in 2023. So an additional $5,000 if you're self-employed that you can put into that account. And then HSAs, which I'll be talking a little bit more about in a few minutes, they got a big boost as well. If you're under single coverage, you can now contribute $3,850 next year, just $200 more, $7,750. If you have family coverage, that's $450 more. On the tax side, as we think about these adjustments, here are just a few updates on that side. So first of all, the bracket percentages of 10, 12, 22, 24% federal tax brackets, those haven't changed at all. They're not set to change for another few years. But each year, the IRS looks at inflation. Last year is running about 8%. They will increase the brackets. And what that means is because average brackets increased by 7%, that means that you can earn 7% more and stay inside of the same tax bracket. Or if your income stays the same, you will end up paying less in taxes. So this is helpful to know. If you're a single filer, look in this column. It's helpful for you to just identify based on your salary or total compensation, where do I fall? Which tax bracket am I in? If you're a married filer, do the same thing. A lot of tax planning is about looking at what is your marginal tax bracket. That's the biggest tax bracket that you fall into, and looking for ways to be taxed as little as possible in that bracket. To give a quick example, let's say that you are a single filer who makes $200,000 per year. What if we took $20,000 per year that would be taxed in this 32% tax bracket? You're making $200,000 and we put it into your 401k. Well, that will reduce your AGI down from 200 to 180, which means that the highest tax brackets that you'll pay in is this 24% tax bracket. So it's important to be mindful of things. One final thing I would say related to all of this is, if you haven't had a conversation about compensation with your boss and you are not self-employed, you're employed by someone else, I know it's been a tough year economically, but you've seen your costs increase. It's being acknowledged in many ways by the government that this is happening. I hope that it's being acknowledged by your employer. And just as one data point, I've had 3 different clients get laid off in the last 3 years. All 3 of them now have jobs, which is awesome. They're high performers like many of my clients are, and they're getting paid more now than they were at their previous employer. And that's because that's what's happening in the job market right now. So this is just a little PSA as you think about your total income for 2023 and tax planning. Probably a good time to be thinking about having a conversation about compensation with your employer. And if you'd like to strategize that with me, I would love to do that with you, because so often those conversations can create $10,000 plus of value in terms of higher compensation for you. There are many ways to structure higher compensation or to have a really nuanced ask, and that becomes your new floor for your compensation. So I love those conversations. If you're not sure or you're feeling nervous about having that, let's talk about it in our next client meeting. Okay, 2 more things. Standard deduction for 2023 is now $13,850. It's $27,700 if you're filing jointly. That's another 7% increase. And if you're lucky enough to be taking Social Security, your cost of living adjustment for next year is 8.7%. That means that your benefit is going to go up by 8.7%. If you're paying into Social Security like I am and you're not going to take for a while, that will increase your benefit as you look ahead to the future. So that is also being adjusted up for inflation. Okay, last update here is I just filmed and released a video on what you need to know about HSAs, health savings accounts. These are the topics that I cover. It's about 27 minutes long, but feel free to jump in there and just check out one of these chapters. I so often see that people are misunderstanding or underutilizing these accounts. So I created this video to help you understand health savings accounts and why you should think about them as more than just a piggy bank for savings now, but as a long-term tool for wealth building as part of your broader financial plan. This little teaser shows how over 35 years of contributions, you could potentially build up to $1 million account balance at a 7% rate of return. And I talk more about that in the video. So please check out that video. If you have an HSA or you're interested in an HSA, I'm happy to talk about that with you or with a partner as you think about planning for next year. Okay, what's next? As we head into year end, I want to continue to encourage you to schedule meetings. I'm reaching out to people right now to schedule meetings to make sure that we're on track, and I'm not proactively looking for new business right now. It's really important to me that every single one of you as my clients knows that you have access to me on an ongoing basis to answer your financial planning questions. So you can log into your financial plan anytime at rightcapital.com. If I'm managing your investments, you can do that at betterment.com. But I would love to connect with you. If this video spurred a planning idea, schedule time at redwoodmoney.com/meet or shoot me a text at 408-617-8757. Again, hope that you and your family had an awesome month of October, and I look forward to connecting with you soon.